market. All right, good morning, traders. Today it's open house here at the BYOB Trading Room. It is October 6, 2025. My name, John Carignan. I am the lead instructor here at the BYOB Trading Room. That is the day trading service for the hit and run candlesticks family. You guys are going to have to bear with me today. I got two rooms open. I'm going to have to flip back and forth between rooms to make sure I don't miss anybody's question. If I miss your question, please re-ask it so I can catch it again. Thank you for being here. Thank you to all my visitors being here today. Thank you. Appreciate that. Thank you to everybody out there in podcast land, digital land, cyber land. Thank you for following, liking, and subscribing to my content. Special shout out to John Jordan, Bob Jordan, Kathy, Sarah Roasted for sharing the content, getting the good word out there to the rest of the world so that they can profit as well. Thank you so much. Appreciate that. Love that. Hey, good morning, everybody. All right, let's take a look at what happened in the markets. Well, let's go ahead and summarize everything from Friday. All right. Again, thanks for being here. My SPY pivot this morning, 670.30. Above it, I'm a bull. Below it, I'm a bear. SPY, QQQ, IWM, Diamond Dow, all made new all-time highs. The market is still bullish, all right? The market still very much bullish. FNGU made a lower low and a lower high, closing under a bearish trap under the 17. SPY closed with a 2-hour uptrend and a 10-minute downtrend. Silver made a new 14-year high. Gold made an inside day. That's a lower high and a higher low, closing over a bullish trap over the 17. USO made an inside day as well, closing under a bearish trap under the 17. UNG now in a daily downtrend, made a lower high and a lower low, closing inside a bullish trap over the 17. US dollar index still in a downtrend. Hey, we like that as investors, as consumers. Well, it sucks because we got to pay more. SPY Max Pain 667 with a put to call ratio of about 2.4 puts for each call that expires today. Remember, those index options expire at 4:15. Security options expire at 4 today. Okay, if you're looking at this for the first time, right here, these are all in bullish daily uptrends over the 17 EMA. If you're looking at this for the first time, these are all in bearish daily downtrends under the 17 EMA. Okay, if you see a star next to it, it is probably building out a launch pad, in other words, a bull flag from which to launch higher. Okay, and if you see a star on this side, it's probably building out a bear flag or a platform from which to dip lower. All right, so there's a lot more bear flags than there are bull flags right now. Okay, so we'll see what happens. All right, but I think one of these broke out yesterday. Forget which one. I think it was UNH. UNH was one of the breakout ones from yesterday. Okay, there was another one over here as well. Okay, that and how I trade these, I wait for the 10-minute downtrend and trade the trend. Okay, so again, if you're here for the first time, all right, we don't pick tops and bottoms because we suck at it. All right, and just be frank with you, that's the way it is. We're not that good. Okay, but we are good at trading trends. All right, in other words, if we see a river of money flowing uphill or downhill, doesn't matter to us. Okay, we're very good at jumping into that river of money, to take us to the pool of profit land. All right, we're very good at that, but what we suck at is picking tops and bottoms. So we wait for the trend, and for that reason we trade the 10-minute trend. So right now, currently, because of this grand bullish market that we have, my favorite trend or my favorite setup is the 15-minute uptrend that resides inside of a 2-hour uptrend that resides inside of a daily uptrend, inside of a weekly uptrend, inside of the monthly uptrend. Okay, so I'm going to have all those bigger time frames supporting my little 10-minute uptrend. Okay, so that's my favorite trade right now. Now, if I just get a 10-minute uptrend, I have a 2-hour downtrend. I'm not opposed to trading that either. Okay, as long as it breaks the rubber band candle. Now, if you scroll up, you'll see definitions for rubber band candle. If you scroll up, you'll see I printed some of that stuff out right around, early in the morning. I shared it. I shared a bunch of definitions up there. You have to scroll up to the top of the chat to see all the postings I gave you early this morning. Okay, so it defines the rubber band candle, the spike candle, and the point of interest. Okay, so again, I like trading when price is above VWAP. All right, I like it when, see, like this right here, when price is peeling away from VWAP, it's moving up and away from that brown line. That brown line happens to be VWAP. Okay, I like to see price peeling up and away from VWAP. I can make a lot of money when I see that happen or when that occurs, as long as I'm in the trade. Same thing on the downside, okay? When price is cutting through and breaking away from VWAP on the downside, there's a 10-minute downtrend. Okay, so how do I know it's a 10-minute uptrend? Okay, you can see the 3 is over the 8. You can see daylight between the 3 EMA and the 8 EMA. So you can see here is a continuation, of the 10-minute uptrend that occurred the day before. That would be Thursday. Okay, so I was looking for a continuation, and you can see the 3, that's that thin yellow line right there that's riding up above the white line. That's the 8 EMA. Okay, so the 3 is above the 8. We have daylight, okay, in between the 3 EMA and the 8 EMA. So you can see there's a 10-minute uptrend that peaked out at probably close to 12:30, 1 o'clock right there, 12:30, 1 o'clock. Then we started a 10-minute downtrend under VWAP. Okay, again, the 3 on the downtrend is under the 8, and you can see daylight in between the 3 and the 8. So we had a pullback, all right, in the evening yesterday. So we left off with a 10-minute downtrend, all right? I'm going to be looking for a continuation of the 10-minute downtrend this morning. We'll see what happens, all right? We still have the 2-hour uptrend. I'm not opposed to trading the 10-minute uptrend. We do have some bullish clues this morning, some of which are price action consolidating over last night's, Friday evening and Friday post-market and Friday evening's price action over here. So you can see consolidation over prior consolidation. We're back up here, testing the all-time highs, okay? All right, for that, that's a bullish clue for the morning, all right? And you can see we had a nice 10-minute uptrend in the pre-market, okay, long before options are available to us. We had a nice 10-minute uptrend in the pre-market there. So markets are still bullish, all right, right now. Market's still bullish. Okay, so I have a green erases red entry over 671.50. Again, my pivot, 670.30. Above it, I'm a bull. Below it, I'm a bear. Red erases green underneath 668.95. Okay, I like 4 days till expiration and 11 days till expiration. Friday options on the multiple of 5. All right, I'm not against trading 1 day or 0 day. Okay, I'm not against it. It's just when I'm starting out a new account. And by the way, I'm starting out a new account every Monday, 27K. And if you're in the free room there, all right, for the visitors, You look up there, you can see my results for the last week when I traded. All right, so it's right there for you to see. So I'm going to start a new 27K account today. So when I start out a new one, I like to have a little more space and a little more flexibility and a little less risk. And I'm willing to give up some performance to have a little bit less risk, because I don't want to blow up my account. Remember, the idea is to make my account last. All right, so going big at the beginning of your account when I'm first starting it out does not make sense, because if I fall below 25K, okay, I don't get to day trade anymore because of the PDT rule. All right, so it's very important that I start out very conservative. Sorry about it, visitors, but it's the way it is. It's my first day on the 27K account. I'm going to have to be a little conservative today. Now, as I build that account up, all right, and I get more and more profits above 27K, I've got more to work with, and I can add to my risk. All right, so I like to, if I'm over, I like to make 1% per day. So if I got 27K, I like to make 270 for the day. All right, so we'll see what happens. I didn't do it last Monday, but I did come back. Okay, so I need to make 270 per day. My schedule is $27,000. Oh, excuse me, 270 for the first day. So whatever my 1% is of my account, I'm going to try to make that every single day. Now, if I make it every single day, okay, cumulatively, all right, remember, like on week 3, I'm going to have, much more profits, all right, in the books. So I'll have to make more, okay? But it'll be getting closer to doubling my account. If I do this for 70 days straight, I can double my account. All right, but recently I've been able to double it much faster. Okay, so here's the process. We're going to trade, and we're going to try to keep our risk underneath 2%. All right, and we're going to try to make 1%. That's our goal, make 1% for the day. All right, so for me, it's 270. All right, now when I get excess, all right, if I have one with excess, let me see if I got one here. No, not that one. Hold on. I've got one here somewhere, okay. So now when I build up the account, you can see I got 9,000 on that day. So when I get excess, and I have a little bit of excess to trade, I can use that with my risk. Now, keep in mind, I don't want to fall below my 1% schedule, okay? So sometimes I only happen to use half of that or 20% of it, all right, in addition to my 2%. Or sometimes I don't even use my 2%. I just use 20% of that because it winds up being greater than my 2%, all right? So I can add that in. So when I got more to risk, all right, I'm able to make more gains. You see that? I'm able to make more gains because I have more to risk. But on the first day, I don't have much to risk because I don't have any excess over my 1%. Now, I may build it up before noon if I happen to. I'll have some excess, all right, over 270 that I can use to trade today. We'll see what happens, okay? If I can find some excess today, I'll have more to risk into the closing hour. So we'll see what happens. All right, so this is the last 27K account that I started on open house on 9/8. That's September 8th, 2025, right there. Okay, so that's the last open house. Starting out another one. This is week 2. All right, new 27K account. So here's our game plan. Okay, up over right here, up over 671.50. All right, that's a green erases red entry up there. All right, I like 10-minute up. I trade 10-minute uptrends over VWAP. I trade 10-minute downtrends under VWAP. All right, if a 10-minute uptrend happens to manifest down here, all right, I'm not opposed to trading it, okay, as long as it breaks the rubber band candle. If a 10-minute downtrend, just like yesterday, happens to manifest up here, I'm not opposed to trading it to the downside, long before it reaches this red erases green entry, all right, on a pullback to the base right here, okay? So I'm not opposed to trading it as long as it breaks that rubber band candle, okay? So I like 10-minute uptrends that are moving up, and away from VWAP, and I like 10-minute downtrends that are moving down, and away from VWAP. All right, now if we look over here to the left, we can see price got shot down right there. So I'm going to mark off a few areas where price got shot down. See if I can get the drawing tools to work. They might not work. They have a habit of not working. Let's see if we can get them to work today. Okay, so you can see, yeah, they're not going to work. All right, so just bear with me. We got a fix for that too. Okay, so take it off, put it back on, just like that. Here it comes. And there it is. All right, so you can see price was rejected here. Okay, and you can see price was rejected here. This is Friday. We went all the way up, sent packing all the way back, and now we're dealing with today. We'll see what today wants to do. Maybe they go up higher and they get rejected. We'll see. Maybe they don't even open up here. Maybe they open up under the pivot. We'll wait and see what they want to do. Okay, right now, showing a double top on the 10-minute chart. Okay, but here you can see price got rejected. Here, price got rejected. Okay, so I'm curious whether the bears are going to let this one pass, or they are going to push the bulls back, or the sellers are going to overwhelm the buyers and push them back to the gap fill, which is down here at the red line. So we'll see what happens. I can see price, see how price gapped up and the bears pushed it back down. Price traded up and the bears pushed it back down. Even here, price pushed up and the bears pushed it back down. Even here, price pushed back up and the bears pushed it back down. So we're in the pre-market, so it'll be interesting to see what happens when the market opens, if the bears are going to let the bulls run for 10 minutes and then push them back down, or if the bulls can actually hold the higher ground, okay? Notice price structure in the early morning market, okay, we've got consolidation over prior consolidation. That's a bullish clue. That's a bullish outlook. So right now, I'm going to remain bullish, all right, unless we lose that, okay? Because if we lose that, then I'm going to probably go with a bearish bias, all right? And we're probably going to get pushed back to this level right here, all right? You can see where price was pushed back here before, second time, third time, a fourth time. The market hasn't opened up yet. We'll see if they can push them back again or if they can actually hold the higher ground. All right, we are very bullish. Okay, very, very bullish. Okay, daily, 2 hour. Let's take a look at the 2 hour. 2 hour. Okay, you can see 2 hour is in an uptrend. Okay, see the daylight between the 3 EMA and the 8 EMA. Okay, so that's bullish. All right, you got daylight there. It's a 2 hour uptrend right there. See how the daylight continues right there. 2 hour uptrend right there on the daily chart. Okay, same deal. Okay, you got the 3 EMA riding up above the 8 EMA, and of course, the price candles, the 3 and the 8 are all riding over this rising 17. We're still bullish. All right, right there. Okay, on the weekly chart, you can see price candles riding on top of the 3. The 3's riding on top of the 8, and you can see the 8 is riding up on top of the rising 17. We're still bullish, okay? On the monthly chart, I'm just showing you all the bigger time frames are bullish, all right? So if we do 10-minute downtrends, we have to recognize that we are trading counter trend in a bullish market, all right? But we do see signs of rejection, and that's the reason why we're trading it, okay? Again, you can see price candles on the 3, okay? 3 EMA is up over the 8 EMA. You've got daylight between the 3 and the 8, and you can see they're all up over this rising 17 EMA right there, okay? So that's bullish and in an uptrend right there. So you get all the bigger time frames, all right? So if we trade a 10-minute downtrend, okay, I'm just saying, we got to recognize we're going counter trend. It may not last as long as we hope it would, all right? It may be cut short at support, okay? So we'll see. We'll have to see what happens, okay? So there's SPY, all right? We're going to be looking for 10-minute uptrend or a 10-minute downtrend, all right? And I'm going to open up the market with you guys. I'll trade it live, and I'll move my portfolio out over here so you can see as I trade. Right here would be the days till expiration. I share everything right here for you to see. All right, and then up here at the top, okay, right up here is going to be my profits and losses, my gains or losses that happen to occur while I'm trading. Okay, so you'll see here's the days till expiration of the option. Okay, this will be the strike right in here. See, 575, 663. Okay, that will be the strike. You can see there's the product. SPY is the underlying security. All right, or QQQ. Okay, now I don't trade everything. Okay, and I don't chase everything. I mainly stick to SPY and QQQ. All right, I stick to those because they got highly liquid options. All right, and that's the reason I stick with them, is because they got options and they got short dated options that I can get in and out of and make a lot of money. All right, because I can leverage my money, because that's what that option enables me to do. You know, picture having control of, let's just say $500,000 worth of SPY for the mere price of, I don't know, renting it for, $2 for a day, all right, or excuse me, like $100 for the day. Okay, so I mean, I'm controlling $500,000, and it's only costing me $100 to rent it, all right, because it's going to expire. Sometimes they expire tomorrow at 4:15. Sometimes they expire Friday at 4:15, or sometimes they expire today at 4:15. All right, so I'm renting it. All right, the ability to trade $500,000 worth of SPY, for like $100 sometimes. Sometimes it's $200. All right. If it's 20 cents per share, let's take the calculator out. Make sure I get it right. All right. Don't want to mislead people. Okay. Let's say I trade something that happens to be 20 cents a share times 100 shares per contract. Okay. Well, that's only $20. Let's say I trade 10 of them times 10. Okay, there's $200. All right, so I'm trading well over $500,000 worth of SPY. If I got 10 of those, okay, because if SPY's currently at 670 times 100, okay, that's 67,000. Wait, times 10 again. So there's, well over $500,000 right there. Okay, so you can see $200, control of well over $500,000, almost 3/4, a little bit in between there. But anyways, okay, you can see I've got control of quite a bit of value. All right, for the price of $200. Okay, so that's why I use leverage. I use options to leverage my money. Now, keep in mind, all right, the option moves based on the underlying security. So we need SPY to move for my option to move, okay? And there's what they call delta, all right? And delta is going to determine how far my option's going to move. Okay, so if I have a 32 delta, okay, that means that for every dollar that my call goes, that the SPY increases, my call will increase by 32 cents, all right, per contract or per share, all right? So it's 32 cents because it's a 32 delta, all right? Now, if it's a 78 delta, if SPY moves up $1, my contract or my price per share moves up close to 78 cents per contract or per share in that contract. So you kind of watch the delta to see how far your product's going to move. Now, if you look at 0 DTEs over here, okay, you're going to see that. Let's just go look at some SPY. Okay. Okay, so these right here, those are at the money because we're at 671, 672 right now. Of course, they haven't repriced yet, but these are the calls, okay? And you can see, probably haven't got the delta out there yet. Oh, well, they get some, okay? So you can see it just goes 0 or 1, so it's completely up to the discretion of the market maker. But if you were to go further out, you'd get a much more accurate delta. These are ones. See, now they start going 97, 95, 90, 84. Okay, so these are 3 days till expiration. That means they're going to expire on Thursday. Okay, 1 day till expiration means it expires on Tuesday. Okay, 0 means, back here you got 0. 0 means it expires today at 4:15. All right, so there we got that. All right, so I'm just going to, that's a little bit of a background on what I trade. I trade the SPY options, and you can see the leverage that I can get. Okay, I can get quite a bit of leverage and control over $500,000 worth of product for like $200, $300. It's very easy, okay? So that's why I trade SPY and QQQ. It's much easier. Not only that, it's easier for me to read because I'm very familiar with it because I trade it every single day, okay? I don't trade Amazon, not that much, or Google or Microsoft, okay? I'm not familiar with them, but if you ask me anything about the SPY, very familiar with the SPY, very familiar with the QQQ, okay? Because I follow them every day. I trade them every day, just about every day, okay? So there's SPY. So we hit the game plan, okay? Back to the game plan. I like strikes that are $2 to $15 out of the money, or $10, okay? Now, if you got in the money, you saw those in the money options. They give you penny for penny performance, right? You saw them. They were 0 DTEs, and they give you, for every dollar that price moves, okay, the option moves $1 as well, okay? But in that, there's also some theta decay, okay? So they will decay in price as time goes on throughout the day. There will be some theta decay in those options, all right? But I like them $2 to $15 out of the money, and for that reason, okay, I like them out there. I'm willing to give up a little of my performance to take on a little less risk, okay? So it makes sense to me to take on less risk. Now, as day traders, we're always managing risk, okay? Managing money and managing risk. You're never going to get away from it. Matter of fact, you're never going to get away from it for the rest of your life, okay? Managing risk, even if you have a house, okay, or a car, Okay, there'll always be some risk associated with whatever you own, and it's the whole reason the bank requires you to have insurance, because there's always some risk. Okay, so keep that in mind. All right, my job is also to manage risk, so I'm willing to give up a little performance, all right, by taking some out of the money options. They're a little bit cheaper, all right, but I give up some of the performance, and I'm fine with that. I really am. I'm fine. But if you want the best performing option, and you will pay up for it, okay, it will cost you much more than the ones that I buy, all right, but it will give you penny for penny performance, and those will be the at the money or in the money options, all right. And the further out you go, the more you'll pay. Okay, so the more time you add to that in the money option, the more you'll pay for that option per share. You can see if I had 20 cents per 20 cents per share, all right, you can see it costs $20 right there on just one contract. All right, let's go back. Let me make sure that's right. One more time. Just one more time. I'm pretty sure it's right. All right, 100 times 0.2. Yep, $20. There you go. All right, so there's SPY. QQQ has a game plan as well. And it pretty much matches up with the SPY game plan, okay? We can move this over here. You can see the whole title game plan. Okay, move it back over here. Pivot for QQQ, 604.50 above it. I'm a bull, below it, I'm a bear. Okay, green erases red. Okay, over 606.20. That's a green erases red entry. A red erases green underneath 602.45. Again, the same thing. I like the 4 days till expiration. Friday options, Friday because they got more open interest. Multiple of 5 because they have more open interest, okay? So the 4 day till expiration and the 11 day till expiration, Friday options on the multiple of 5. You can see I'm pretty detailed about which ones I want, all right? I'm like zoned in. I want Fridays, I want multiple of 5, all right? And there's a reason, because they got more open interest. I want a nice 1 penny spread. My favorite option to trade, okay? I like them. This is my favorite, is the range between $1.20 and 30 cents. Those are my favorites, okay? I can manage that. I'm familiar with that. I like that. And I don't care that they're out of the money, okay? I can work with that when they're between 30 cents and $1.20. Okay, if they start getting up over $1, they start getting a little too expensive for me to accumulate a lot of contracts. Okay, so I don't like that. I like them when they're down around 30 cents, 20 cents, 30 cents, 40 cents. It's easier for me to manage that than it is when you're paying $2, $3 for a contract. Okay, because I like to trade a lot. All right, I don't like to trade just one. I like to have some that I can sell often. All right, I like to trade very often. I do a lot of trades. Okay, now people say, like, John, how many trades do you take in a day? I take a lot of trades, but you got to think about it. Okay, for me to make money, this is all it takes for me to make money. Remember, all I got to do is make a buck. All right? All right? If I trade and I make 1 penny on my contract, okay? That pays for all of my commissions. So if I make 2 pennies, okay, that gives me profit. Okay? It gives me $1 profit. Okay? So I trade very often. I reload very often. All right? I sell very often. I do a lot of trades, but keep in mind, all right? If I'm giving you, all right, if somebody's giving you, let's just say $2 every minute, okay, and you know there's 6.5 hours in a trading day, I'm just saying for instance here, okay, someone's giving you $2 every minute and you think 50 is too many trades to take, okay? Okay, I'm just saying, maybe you think 50 is too many to take, but, all right, but I'm giving you $2 every single minute. Do you want me to stop after 50 minutes? I mean, we still got, what, 5.5 hours left in the day. You know, a little more than 5.5 hours left in the day. You know, I mean, how hard is it to click the mouse, okay? If every time, every minute you click the mouse and you make $2, all right, or $3 or even $1, all right, okay? Does it matter to you how many trades you take? As long as the costs are covered, all right? If the back end is covered, who cares? Right? I mean, if you're making $2 and $3 and $4, and there's some, let me just say, there's some trades I make 200%. All right? On some contracts. Sometimes 300%. I've made as much as 1,000%. And I'm talking within 6.5 hours. All right? So, does it matter how many trades you take? It's just a click of the mouse and you capture some profits. All right? Believe me, I'm all about making it last for the whole upside, okay? You rarely see me get out, you know, the whole position before the upside is done. But I'm just saying, if somebody's giving you money, okay, every minute, all you got to do is stay in that 10-minute uptrend. All right? You want them to ride that 10-minute uptrend till the 3 crosses the 8. Okay, so it doesn't matter how many trades you take. It's just, come on, it's just the click of the mouse. That's it. I mean, come on, you just go over there, sell. That's it. Does it matter? Is it, people say that's too many. How can that be too many? The more I trade, the more I make. It makes no sense. All right? Now, you don't, if you want to hold your whole position until the 3 crosses the 8, hey, go for it. I'm fine, but I like making money along the way because every little candle, notice every little candle has a high and a low, all right? Because the market decided to do that, all right? So if they have a high, I'm going to try to sell at the high. If they have a low, I'm going to try to reload at the low. Every time the market does this, okay? If they don't want me to sell at the high and buy at the low, then stop moving around, okay? Move it in a straight line. And I'm fine if they move it in a straight line. That's great for me too. But the market is greedy. Okay? Believe me, the market is greedy. Okay? That's why they move it around. So they can juke you out of your trade. They can strip you out of your money. Okay? That's why they move it around. But if they're going to move it around, I'm going to exploit it. All right? I'm going to take advantage of it. All right? They don't have to move it around, but they chose to do this. All right? So don't feel sorry for them, okay? If they're going to move it around, I'm going to take some profit at the top of that candle and I'm going to reload at the bottom of that candle, okay? All right? As long as it's in a 10-minute uptrend. Okay, that's just my philosophy. And I don't feel bad about doing it. All right? I don't care if it's NVIDIA, Microsoft, Google, whoever. Okay? I don't care. If the market wants to move it around, then I'm going to take advantage of it. Right? Otherwise, just move it in a straight line. Okay? If you don't want me to take advantage of it. And I'm fine with that, because then all I got to do is look at the line and say, is it still going up? All right, I want in. All right? Either way, I don't care, all right? But don't complain about it, all right? There's QQQ. All right, let's take a look at QQQ, and we'll go back to SPY, all right, on the daily chart. Okay, here's QQQ making a new all-time high, all right? It's bullish and in an uptrend, okay? Here's the quad lines. Here's the April low, okay? That's a new all-time high for QQQ. We're going to go back to SPY. Okay, SPY, see that? This is yesterday's candle, not this one right here. That's bullish, and in an uptrend, SPY. Okay, let's take a look at IWM. It's a daily chart of IWM. This is yesterday's candle. See that? 10-3. New all-time high. Okay, so that's bullish. See this? That's bullish and in an uptrend. Top of quadrant 4. Okay, let's take a look at Diamond Dow. Okay, you can see obviously this is yesterday's candle. Okay, it's up at the top of quadrant 4. That's bullish and in an uptrend. The markets are bullish. All right, let's take a look at FNGU. Not quite like the others. Okay, got on FNGU, we got an inside day. That's a lower high. See, here's the previous high. Let me make sure I got this right. Yeah. Okay, we got a lower high and a lower low. Okay, this is yesterday's candle. Lower high, lower low, closing under a bearish trap and under the 17 EMA. Okay, now we got to be careful because this one, we watched this one. Okay, this one has 10 of the most heavily weighted securities in the QQQ and the SPY. All right, and when these 10 move as a pack, okay, like a pack of wolves or a pack of bears, okay, all right, they can drag those two indexes right along with them. All right, so we have to keep an eye on this. All right, now notice the indexes are making new all-time highs, but the pack is not. Okay, but it's still bullish. It's up at the top of quadrant 4. It's still holding the higher ground over the last consolidation right here. It's still bullish. It's still in an uptrend right there. Okay, hasn't made any lower lows. All right, any lower lows? Not yet. Hasn't made any lower lows. Okay, here's a low. There's a low, but that low is higher than this low. So still in an uptrend, just not moving up. Okay, let's take a look at USO. All right, here's a daily chart of USO. Okay, now if it's in the up, here's the quadrant lines. Okay, if it's in the upper third, all right, it's bullish. Okay, of the quadrant lines, so it'd have to be like up here. Okay, right on. See above that line right there. So like above that line, that would be bullish. Okay, and then, you know, below this line, this would be the lower third. Okay, below this line would be bearish. So it's not, this is where we closed. Okay, so it's not in the upper third, it's not in the lower third. So it's just neutral. Okay, that would be bullish, this would be bearish. So it's just neutral right in here. Okay, now this is today's candle, that would be yesterday's candle. Okay, you can see here's a low, and they made a lower low, so that's a downtrend. Okay, they started a new downtrend when they made, see the low, a lower low. Okay, this is USO. This is U.S. oil fund right there. Okay, so yesterday, this is the candle, lower high. See the high of the wick? Lower low, higher low. So it's an inside day. And it closed below, see the 3 is under the 8. So it closed below a bearish trap. And underneath a wavy 17 EMA. Okay? Okay, so this dash line is the midpoint. That would be like midfield, half court, 50-yard line. Depending upon what sport you play, okay, or you watch. All right, this would be midfield, mid-ice. You know what I'm saying? Okay, so notice it's just kind of hanging out right in the middle there. Okay, so it's just neutral. Now notice every time it goes up. Okay, it can't hold the higher ground. It gives it up. It goes up, and then it gives it up, goes up, gives it up, goes up, gives. Now I got a saying: if it goes up, gives it up, it's neutral. If it goes down and gives it up, it's neutral. Okay, but if it goes up and holds, that's bullish. If it goes down and holds, that's bearish. If it just stays in no man's land, it's just neutral right through there. Okay, so again, we're neutral. and in a downtrend. If you want to know what the pink line is, that is the post-COVID high. So there's the COVID rally. There's the high off the COVID rally. All-time high, COVID rally high anchored VWAP. Not the all-time high, but that's the post-COVID rally high anchored VWAP. Also known as the 3-year high anchored VWAP. That's what that is, okay? Now, what I like to see in the SPY and the QQQ, I like to see 10-minute uptrend over VWAP, all right? Because that's powerful, and even more powerful when it's over the all-time high anchored VWAP. That's when it's more powerful, all right? So keep an eye on a situation or an event like that to develop. That's when it's really, really powerful right there. This is USO. Let's go visit UNG. Okay, UNG, see it made a high up here, so they're in an uptrend only because they took out that high up top there. Yesterday's candle would be this one, make sure. Okay, Friday's candle, lower high, lower low, closing in a bullish trap over the wavy 17 down here. But if we zoom way out, you can see we're at the bottom of quadrant. We're in the middle of quadrant 1. That's bearish. All right. So they're in an uptrend. All right. That's in the bearish zone right now. So they're trying to fight their way out of the bearish zone. Right there. So that's weak and in an uptrend right now. Okay. It's weak because they're way down here. All right. Now they could develop some strength and find their way back to this 2-year high anchored VWAP right there. Okay, so we'll see what happens. All right, right now they have an uptrend. Okay, so far they've got 4 days. They've held these highs. Notice last time they were up there, they held for 5 days and then they started to give it up. So we'll see. Not a lot of faith in them right now. I'm not seeing a whole lot of conviction yet. There's UNG, so that's bearish, but in an uptrend. It's really like a pullback in that bigger uptrend. Let's take a look at silver. Okay, silver, I'm going to pan way out. That's a 14-year high right there. This right here is the all-time high. Okay, yesterday, it's Friday. Okay, they made a new 14-year high. They're making another new one today. Okay, this up here is not a quadrant. It happens to be the space between the 14-year high and the all-time high. This area right here. So this is bullish, top of quadrant 4. And obviously, I mean, come on, that's an uptrend. All right? You pretty much know that's an uptrend. You see all the green dots. You see how price just keeps going higher. Okay, so there's no question. I hope no one's confused that that's an uptrend. That's pretty clear that that's an uptrend. GLD. All right. This would be yesterday. What inside day, lower high. It'd be Friday. Lower high, higher low, closing over a bullish trap. See over the 3 EMA. All right. Up at the top of quadrant 4, this candle put them in today. So they got another new all-time high today. Okay, over the rising 17 EMA, no question that's bullish and in an uptrend right there. Okay, so let's take a look at our technicals. Then we're going to go visit the economic package. This is the market breadth. Okay, now the last time we were down here, okay, the last time was the COVID high. All right, pre-COVID high, we were down here, and then we had the COVID dip. So in other words, we reversed out of here to produce the COVID dip. Remember 2020 COVID dip? Okay, so the last time we were down here. But there was a double bottom. Okay, so I'm going to go to the 2-day chart so you can see it. Okay, so here's 2020. See right there? Okay, that was the COVID high. Okay, then this was the deep COVID dip. Remember that? COVID dip right there. Okay, and then we came all the way back. And this was the beginning of, from up here, of the COVID rally. Okay, this would be 2020. Okay, that'd be January of 2020. So that's the last time we were down here like this, was a double bottom right there. And then came the COVID dip. Okay, I'm just pointing this out. This T2101 measures market participation. Okay, so you can see less and less participants are participating. Okay, so not very much participating. Last time we reversed out of here was when we had a double bottom, and that was just before the pre-COVID high right there, and then that produced the COVID dip. All right, so here's T2101. So kind of be careful. All right, so there's very few stocks controlling most of the price action. T2101, T2122. Okay, yesterday, Friday, I keep forgetting. Okay, we went airborne over the buyer's chop zone, into the overbought zone, and just kind of chomped around there for the first half of the day between the overbought and the buy zone. Spent the rest of the day melting through the buy zone into the buyer's chop zone right here. Okay, good news, higher high. Good news, higher low. Okay, bad news, we're melting. Okay, T2122, T2123. Okay, still got a bearish gap. Anytime the bulls create a gap and the bears can't fill it, okay, I tend to adopt a bullish bias. Okay, guess what? We got a bearish gap and the bulls can't fill it. Okay, so kind of got a little bit of a bearish bias here. Okay, just a little bit, but I got to recognize back in the market they're making new all-time highs. Okay, so I got to kind of quell my bearish bias. So maybe they come back down, make another low inside of that, that T2101, that low zone, that reversal zone down there. Okay, bullish outlook, consolidation over prior consolidation. That's bullish. Okay, I mentioned that earlier. Consolidation over prior consolidation is bullish. Okay, there's a bullish gap up that the bears couldn't fill, so I have a bullish bias there, but I also have a bearish bias here. So kind of just neutral right now. See, bearish gap down, 6 days, they still can't fill the bearish gap. Okay, 1 day bullish gap up. All right, we didn't fill the gap yesterday. Maybe we do it today. Maybe we don't do it, and they fill the bearish gap and continue going higher. There's a possibility also. We're up over the 200 SMA. That's bullish up there. Consolidating over prior consolidation. That's bullish. T2123. So on the 15-minute chart, okay, we're in an uptrend. We're over the 200. That's the place I like to be. Okay, we're in an uptrend, but we still haven't filled this bearish gap. Okay, that's all I'm going to say. Okay, that's bullish. We're in an uptrend. Okay, and we still haven't filled this bearish gap. And we're over the 200 SMA. So I'm bullish right now on the shorter time frame. Okay, unless they lose this, all right, fill this gap, all right, then that'll be some change in the bias right there. Okay, T2123. Here's 3-bar chart. Okay, I'll zoom way out. This was the prior all-time high. This is the recent all-time high. You can see price moves up and over to the right. See the hold of the higher ground? That's bullish. See price over the rising 200 SMA? That's bullish. See price holding near the highs? That's bullish. Okay? So price action still in an uptrend. Okay, even though we put in these, see these red candle balls right there, or 17 EMA right there, red ones. Okay, notice they didn't come down below these red ones, so we're still in an uptrend right there. It's just a pullback in the uptrend, and we're still up over the 200. So top of quadrant 4, okay, that's bullish and still in an uptrend on the 3-bar chart. Remember, on the 15-minute chart, we just now commenced a uptrend yesterday. We were in downtrends. Commenced an uptrend yesterday. Okay, we'll see how long we can hold on to that uptrend, and we're over the 200 SMA. FNGU. All right, FNGU for Friday. Okay, they got themselves into a downtrend. See the low? 15-minute chart. They made a lower low. See the low below the 17? They made a lower low. So they're in a downtrend under the 17. So they're in a downtrend here because they made a lower low, and they're under the 200 SMA, not my favorite place to be. Again, they're coming back down to challenge this neckline. If they happen to break this neckline, you can see we're showing head and shoulders pattern. Okay, and we keep an eye on this because this has a lot to do with the SPY and the QQQ, and those are the two that we trade the most. So we have to keep an eye on this. Okay, so got the bearish head and shoulders showing up. Got the neckline getting tested quite a few times here. Okay, and we find ourselves closing the day under the 200 SMA and in a downtrend. So we have to keep an eye on that. Let's take a look at the economic numbers, then we'll wrap this up and then we'll open up the markets. I'll come back in like 15-20 minutes. Okay, the economic numbers stopped flowing, all right, due to the government shutdown. So today, let's see what's scheduled. Nothing is scheduled. Tomorrow, international trades in goods and services, it may get delayed because of the government shutdown, unless, of course, things were taken care of. I don't know. I haven't read the news yet. All right, so there's 8:30 tomorrow, international trades in goods and services. A lot of Fed speakers going to offer their opinions about everything. And that's consumer credit comes out at 3. That's it. Wednesday, MBA mortgage applications. We missed the last one due to the government shutdown. Supposed to come out again at 7. Petroleum report at 10:30. FOMC minutes. We'll see if we get those. Those are supposed to come out at 2. Thursday, jobless claims. Again, we missed the last one. 8:30. Mr. Powell's going to speak at 8:30 in the morning on Thursday. Wholesale inventories, 10 o'clock. Natural gas report, 10:30. And that's it. Okay, we do have financials. I'm not even going to go over Friday. Okay, we do have financials that are due to report later this month. Okay, what do we have here? Okay, so just some familiar names, but nothing that's going to move the markets. Okay, Tuesday, familiar names, but nothing that's going to move the markets. Wednesday, familiar names, nothing that's going to move the markets. PepsiCo, 194 billion. Okay, so they're probably going to have a big effect on the retail sector. Okay, but really not going to move the markets. Okay, tech drives the market. Okay, not retail. Tech does. Okay, so you look for tech. Microsoft, Google, NVIDIA, anything with tech, AMD, Intel, those are the ones that drive the market. Intel's not big enough yet, but they will be. Friday. Familiar names, nothing that's going to move the market. So really light week. Wherever the bulls want to move it, there's nothing to stop them from moving it there. Number one, there's no economic reports coming out to squash them. Number two, there's no earnings announcements coming out to squash them, okay? SPY max pain today is 667, all right, with a just about 2.5 puts for every call that expires today, okay? So I'm going to take a little break. I'm going to go back to the other room to see if there's any questions, and I see one. You're helping them to get out of their positions. Bill, regarding me trading in and out, he said that at 8:40. Is that in regards to me trading in and out Yeah. I guess you could say it. It doesn't matter to me. I'm making profits. But for me, that's how I trade. Now, you don't have to trade like I trade. You can just hold it till the 3 crosses the 8. Just like I think I mentioned it earlier. I'll go back over to right here. Okay, and we'll pull up the 10-minute, and we'll pull up SPY for yesterday. Okay, which was a beautiful thing. See how that 10-minute uptrend rides? You can just hold it, and when the 3 crosses the 8, all right, you just box that off right there, get out. Okay, got a downtrend, get in, and 3 crosses the 8, and get out. Okay, so get in, get out, get in, get out. Okay? Me, they like to exploit it, so I'm going to trade it. And they do this to juke you out of your trade, to shake you around. And they do this because they're greedy. If you know that and recognize and you know how to exploit it, that's what I do. Well, if you scroll up, you'll see the results. And I shared my results for last week and then the 3 weeks before that. And then I got a game plan, a SPY game plan, everything up there. If you're in here for the first time and in the visitors room over here, okay, you can see I come in every morning and I share all that every single morning. Yeah. Thanks, Bill. All right, so let's take a break. All right, so I can get this video wrapped up, get it out there to video land, podcast land, digital land. All right, and we'll start another video and in about 20 minutes. Okay, and we'll open up the markets and I'll map everything out for us. Okay, so that's what we're gonna do. I'll map it all out. Again, I'm looking for a 10-minute. I'll say it again. I'm looking for a 10-minute downtrend under VWAP. All right, a continuation of this 10-minute downtrend. Okay, I don't care if it starts back here, but I'm looking for a 10-minute downtrend under VWAP. And you can see right here, that's the rubber band candle. That's VWAP. It's broken. Here's a 10-minute downtrend. All I got to do is jump in. Okay, remember what I was talking about earlier. You see a river of money, just jump in. Okay, all I got to do is jump in. That's it. All right, I'll see you guys in about 20 minutes. Let me get this wrapped up.